Hey everyone, how's it going? My name is Richard and welcome back to the Trader Lion channel. Now in previous Tuesday tutorials, we've talked about the relative strength line as well as the enhanced volume indicator, and we've got versions available for Thinkorswim, TradingView, as well as this platform, TC2000. So if you want to check out those videos as well as the free scripts, check the link in the description down below and you should be able to find what you need. But in this video, I'm really excited to talk about what really ultimately matters in trading, and that is how to analyze price and volume action. So zooming into one particular bar, we'll really talk about how to analyze what it actually means to close high in the range, low in the range, and what kind of is happening behind the scenes. So taking a look at this individual bar, we're looking at an open, high, low, close bar. So over here to the left, this horizontal line is the open. This horizontal line off to the right is the close. And then this high is the high of the day, and this is the low of the day. So this is the exact same data that can be represented by, for instance, let me change to candlesticks here. Candlesticks show the exact same type of information. Here is the open, here is the close because it's filled in blue, so it was an up day. So the close is higher than the open. And on this day, it's basically pink. So the higher level right here is the open, and then this is the close. So it's the exact same information, but some people prefer open, high, low, close bars. Some people like candlesticks better. Just kind of pick one that works for you and makes sense and stick with that one. But for me, open, high, low, close bars just make a little bit more sense. So I'll switch back to that right here. But looking at one bar, I kind of view every day or every bar as a match of tug of war between buyers and sellers. And the buyers are trying to pull the stock up towards the high, and the sellers are trying to pull everything back down to the low. And the close basically shows us on that particular day who was stronger, the buyers or the sellers. And this is really summed up quite well using the closing range of that day. So the closing range is calculated by taking the range from the high to the low and basically looking at where the close was within that range. So if, for instance, the close was right at the high of the day, the closing range would be 100%. If it closed at the low, it would be 0%, and it would close right in the middle. For instance, if the high was 100, the low was 90, and it closed at 95, the closing range on that particular day would be 50%. So a quick rule of thumb is anything greater than 50% suggests that the buyers were in control, and anything less than that, sellers were in control. But obviously, the higher the better, and the more conviction the buyers had if, for instance, the close was 98, 95%. So looking at this day, we have a closing range of around 60, 70%. But you also do want to consider in this case that we have a gap up on earnings. So if you kind of make the pseudo range start from this close all the way up to this high, the true closing range is much, much higher, more like 95%. But moving on to this bar right here, this also is another example here of a very strong day. We have an open right near the low. We have a close right near the high. Volume was high as well. And the overall closing range was about 95%. So on this bar, buyers were in control. And the expectation the next few weeks or few months is that the trend will continue, especially considering this volume. So speaking of volume, whatever price is doing on a particular day, volume kind of adds weight and conviction and emphasis to that particular price action. So if we have a strong close like this day on the highest volume in the past 250 days, that is significant because that suggests that institutions were involved on that particular day. And moving forward in this run, we can take a look at a few more examples. For instance, this bar right here is once again on very high volume. You can see it was also the highest volume within the past 250 days. And we have a very strong closing range. However, you also want to take into context where the stock is within the run. So this day was a very strong day, up 19.9%. However, it's happening when the stock has already run 150% within 3 months. So at this point, we're very extended within the run, and it might be time for another base. Things are getting very long in the tooth. So at this point, everybody who missed it throughout this run is buying shares. Their friends are texting them. They're looking on Twitter, and everybody's buying Tesla. Everybody's making money, and so they're piling it into the stock. However, the next day we have another gap up on very high volume, and it's an up day. So you might say, wow, that's a good day. But look at where we closed. We closed well off the highs here, under 50%. So there might be some distribution here. And this is what we call high volume without further price progress. And it's a sign of distribution at this point. And sure enough, this actually marks the top. After this, Tesla kind of rolls over. Let's zoom out here and take a look at the base that forms. And during the March correction, we basically roll over, but then we do ultimately reset once again. So just because a stock has very high volume and it was an up day doesn't necessarily mean it was accumulation on that day. And you also want to really remember to take every bar within the context of the overall chart pattern. Bars like this are very good when we're breaking out of sound bases after long price consolidations. And if we go back to the first bars we were talking about, this was in the context of a longer term basing period in Tesla. And if you watch my stage analysis video, which I posted last week, it'll be linked above right now and in the description as well. This was the start of a stage 2 uptrend. So it was very early within the stock's run. And on the other hand, this bar right here was after a nice long uptrend, and there hadn't been a proper consolidation period to shake out the weak holders and reset the stock's move so it could have another 50, 100% increase in a short amount of time. However, if we move forward, we do have a nice long consolidation here. And let me move forward just a little bit here. And you can see that after this base, we move down and then price really tightens up on very low volume. So these orange bars here mean that volume on that day was relatively low to the previous 50 days volume. And tight price action like this, especially on low volume, indicates subtle accumulation as there's basically no sellers at that time and funds are just absorbing any supply that comes to market, keeping that price really, really tight. And Tesla moves up on higher volume on these 2 days. You can see their pocket pivot volume signatures, and then goes once again really tight right above the prior all-time high here. And that high post split was at 193.8. And this tightness once again suggests that there's no sellers, and we oscillate back and forth above this pivot and then have a few days of really high volume with very good closing ranges. If you take a look at these bars, this was basically, if I look at the closing range, 98%, this was 90%, and this as well was strong at 70%. So the best indication that a trade will work is that you have a bunch of days in a row of high volume and high closing ranges, ideally over 70, 75%. That just really indicates that the impetus behind the move is not retail buying, instead it's institutions buying shares, and that's really what creates this very high volume and these strong closing ranges, a really strong buying pressure behind the stock. And after a proper consolidation period, like we saw with Tesla right here, this means that the trend can really last for months. And as retail traders, we want to ride that trend as long as it lasts. So moving forward, we can analyze a few more bars within Tesla's price chart. First of all, looking at here, we've once again got very high volume, but you can see that the stock moved up all the way to the high here and then actually closed red on the day, down 17% from its highs. So ask yourself, is this proper action? Is this strong accumulation happening, or is this distribution? For me, we have a gap up, which I'm sure everybody who's owning the stock at this time was cheering. We've got a gap up, we're going to the moon, but we have a move up, and then sellers basically take control and close the stock down with a very poor closing range, basically in the bottom 10% here on high volume. So this marks the start of another consolidation. Then we once again have a gap up on high volume after a proper consolidation, strong closing range here, and then we have fallen days of strong moves on higher volume. So once again, remember, not every gap up is good, and also not even every strong move up with a good closing range is good. You also have to take into context how far has the stock come within the previous few days, weeks, and when was the last consolidation period. And the last thing I want to talk about in this video is multi-time frame analysis. So far in this video, we've been taking a look at daily charts and their closing ranges, but you also want to consider weekly charts and even monthly charts, yearly charts, and take a look at those basically closing ranges as well. So this is actually a good example. This was the gap up we talked about where we are analyzing those first two bars. Then we have a strong move, a strong weekly move. Basically all these weeks have very good closing ranges. And then we get up to that point where we were getting a little bit climactic and we have a push off those highs. So here on the weekly chart, we see it very clearly, very high volume without further price increase. And we have a move well off the lows to end off the week, which ultimately marks the top. So pay special attention to not only the daily charts, but also take a look at the weekly charts, see how far you've come from previous consolidation, and also look at the closing range, because you can see on this breakout, we have a very strong move on high closing range, and this starts the beginning of another really strong uptrend with Tesla. So don't only consider the daily charts, also take a look at the weekly charts for context. And also when you're near that breakout level, you can also go down to a 65-minute chart, a 15-minute chart, and really analyze supply and demand, support resistance, and the closing range on that smaller time frame to really narrow down your buy points. But in my opinion, I believe we should focus mostly on the daily and weekly charts because as position traders, swing traders, those are the trends that actually kind of matter to us, because we're not really a day trader. We're not focusing on those intraday charts and trying to buy every little dip within the context of that very small time frame. We want to be riding the trends that last weeks and months. So mostly I would say focus on the daily and weekly charts. Those are the timeframes that matter most to us as position and swing traders. And with that, that's pretty much it for this video. I hope you guys learned something about closing ranges and how to basically analyze whether buyers or sellers are in control on any given time frame. And if you did enjoy it, please go ahead and leave a like down below and subscribe if you're new to the channel. I'll see you guys in future videos. Thanks.